Good day, fellow investors. One of the most requested stocks from my research platform members was a Polish stock called Mo-BRUK. So I have taken a look at it and I want to just share also in video format my opinion on it. So I have just started looking at some stocks that members suggested. I think there were hundreds of comments, but let's discuss one by one, and Davor here suggested me to discuss Mo-BRUK. Warsaw Stock Exchange, waste management business. It was a high growth stock, now it has a dividend. I have looked at it and it has a payout ratio close to 100%, so it will likely be lower. Forward, solid balance sheet, okay. Poland, fast growing economy, okay, when compared to Western Europe, but it ain't that fast. Underdeveloped company, no debt, sector where there are high barriers to entry, that is correct, but there are also some issues there. And main risk is not just illiquidity and traded in Poland, but there are other things that we'll discuss in a moment. Of course, congrats to those that have seen this early and now made, 30 times their money. However, I want to discuss something here, and many people ask me, Sven, why don't you just use screens, put your requirements? So this company here was losing money, was not growing, and those that bought here made a lot of money. So it is about understanding the business, and that is something you cannot see through a screen, and that is why I prefer to go through lists. When it comes to the business, so we have industrial waste incineration, medical waste, solidification and stabilization of waste, and production of RDF, which is a substitute for coal and other fossil fuels. When you look at the business, it has extreme EBITDA profitability, and that is also with these, let's say, also regulated businesses, can be an issue if the government says, okay, you're making too much money, you need to lower your profits. It has slowed down a little bit recently, and as Davor said, the stock went down a little bit, and okay, made a little bit less money, profitability a little bit down, so it will be around 80 million for the year, but still, that is a P ratio of 12 for 2023 at current prices. They plan to grow through mergers and acquisitions. They have some other investment programs, around 40 million of capex, that should then add more slow and steady growth. But if you look at the business, as said, it had a loss here, wasn't growing that much, decline, so you don't see that in screeners. You need to understand the business. And then there was a boom when the stock also followed, but lately we have had this slowdown a little bit and a decline in net income. The dividend is higher than operating cash flows, which means it's not really sustainable, so it should go down, but the cash flows from operations also are a little bit down, so it has just subdued, but I don't think that the growth achieved here will be again replicable. So now maybe it is a slow and steady grower going forward. Therefore, P ratio 12 for Poland is nothing wrong with it. And you can see here 110 million in dividends on 90 million in operating cash flows. That is not sustainable. Also, there are some other issues there, increase in fees, some things can always go wrong with these companies, and therefore you never know what can go on. So a margin of safety has to be there. A P ratio of 12 is not that bad. So when it comes to this company, it's a very interesting business, very interesting niche. It looks like a very okay business, but I'm not going to invest in it, but maybe you will, because the reasons are not related to the business. I am not really reading Polish newspapers, I don't understand the politics, I don't understand the framework related to such investments and whatever is going on. And I also am not interested in that. So that the Polish market will likely remain there for me, as I cannot invest in everything, chase things around the world. That's one. Secondly, I think the money has been made here. So yes, the stock is down 30%, but the stock is up still 1,000% from here. 10 times. So the stock is up, the stock is not down. Don't get confused by short-term charts or something like that. Even 5-year, that's a lot of up and up. So now I think it's fully valued for what it offers for an Eastern European company, nothing wrong with it. See how such a company, likely a steady grower going forward, fits your portfolio at a P ratio of 12. Expect a lower dividend, and then always understand how that business can evolve in the future. For that, you need to know the European market for their products, input out, how much are they paid for waste management, possible competition, output results also, what the substitute for coal, what's the price there, did they just make money because coal was extremely expensive, now that price goes down, lower margins. So understand the cyclicality and then see at what price this business best fits you. And something very interesting when it comes to these requests. This is, I wrote Mo-Bruck into my email, and the first email I got was in 2021. 2021, 2021, 2022, and most recently only one in July 15 this year for this year. So when did people ask about the stock? 2021. And when was the stock on the highest level in 2021? Nobody asked here. Maybe someone, some genius asked, but I missed also the email. So when it comes to investing, the obvious is usually fairly priced, nothing wrong for an Eastern European company, P ratio of 12, that is in line with the others I've been looking. We'll discuss some more in the future as I continue through my subscribers' suggestions. Thanks for watching, I'll see you in the next video.